Hello, ladies and gentlemen. This is Thomas Fross here with Fross and Fross Wealth Management, where as always, we at least attempt to be the voice of reason in a world full of the pundits of pessimism and the wall of worry. So it's hard to believe that 2024 is almost in the record books. And looking back now, we see that this year was very strong for equities, and it started off strong. The stock market did really well in just the first few months of the year because the US economy was solid. Inflation was not rising as fast as what some pundits had expected, and companies were still making good profits. People were also super excited about the advancement that we've seen in artificial intelligence, which really helped to boost technology companies. And the good vibes kept going right on into the summer. By June, the stock market was having its best streak in a long time, and things were not quite as unpredictable as usual. Artificial intelligence continued to help technology companies grow, but higher interest rates slowed down some other areas of the economy. In the bond market, things were a little up and down, but overall the economy stayed strong. Inflation got better, and there were plenty of jobs available, which is what we really want. By September, the S&P 500 was having one of its best years in decades, especially considering the fact that this was an election year, and election years are historically not necessarily good for the stock market. And it wasn't just about technology anymore. Industries such as utilities, real estate, and financial companies started doing well as well. In September, the Federal Reserve lowered interest rates for the first time since 2020. Why? Because they saw inflation getting under control. Lower interest rates helps the economy and helps jobs continue to grow. Now, looking back now, we see that they've lowered interest rates twice since then. So now the federal funds rate is a full percent lower than it was at the beginning of this year. Then, of course, we know what happened in November. Donald Trump was reelected as president. And in addition, Republicans took over control of Congress. I think investors are hopeful about possible tax cuts and less government regulation, but at the same time, they're still unsure about what's coming in trade, immigration, and government spending. Now, 2025 is shaping up to be a good year for investing, but it's not going to be smooth sailing in our opinion. The economy looks strong. Inflation is getting under control, and companies are expected to grow their profits. Plus, technology innovation and government policies focused on growth could certainly help stock prices go higher by the end of the year. And that said, we're likely to see some ups and downs along the way. So we're not expecting this year the market to go up in a straight line by any stretch of the imagination. Now, here's the catch. A lot of the good news people are expecting might already be built into today's stock prices. What does this mean? Well, it means that there might not be quite a bit as much room for big gains unless things go better than expected. And if they don't, then stocks could take a hit. Investors should get ready for a bumpier ride in 2025 compared to the smoother path that we've had this year. Some stocks are priced really high right now. Interest rates are still higher than we'd like to see. And if the economy slows down more than predicted, it could make things a little tricky. Now, the big question is, are people ready for a few tough months if things don't go perfectly? After 2 strong years for the stock market, it's definitely something worth asking or thinking about. So what's the game plan for 2025? Well, we're going to keep it simple here at Fross and Fross Wealth Management. We're going to make sure we keep you diversified. We're going to make sure we never put all your eggs in one basket. We're going to spread your investments. We're also going to remain overweight U.S. companies. They seem to be on solid ground compared to many other countries. We're also going to look for investments that pay steady income, and we encourage you to be ready for some surprises along the way. By staying focused on these basics, you can handle whatever 2025 throws at you. Remember, investing is not just about big wins. It's about staying smart and steady, even when things get tough. So congratulations on making it through yet another year. We look forward to seeing all of you soon to 2025. Have a wonderful day.